multiple periods of being tested, and they got immune to shocks to a certain degree. They would be seeing possibly somewhat less inflationary pressure. Why? Because when you are on the receiving end of tariffs, what it means is that actually domestically you don't have pressure on prices. We can expect emerging markets to look at their policy tools very carefully. We urge them be very careful with fiscal measures. Don't rush to provide fiscal support willy-nilly because you cannot afford to lose fiscal space. Have a medium long-term framework to rebuild this fiscal space. On the monetary policy side, watch pressures. We are saying inflation is likely to slow down, but watch it and watch inflation expectations. Do what is necessary given the data you have. And very important, allow exchange rate to be a shock absorber. We have the integrated policy framework that offers advice to countries how to approach exchange rate issues with great care. You're an emerging market. Actually, the minister is not saying that, but one thing emerging markets can do for themselves is get your own house in order. Pursue reforms relentlessly, because this is what makes you stronger.
Absolutely.
We have time for just one last question. So I'm going to go second row, the gentleman in the blue suit.
Thank you, Mrs. Kozak. Mr. Aljadaan, Manager Director at Georgieva. I'm Philippe from L'Orient Le Jour, Lebanon. My question is addressed to both of you. How will the IMF support Syria, and what role will it play in Syria, in the country's reconstruction? Thank you.
Minister Aljadaan, in the opening, recognized that Syria has returned to the international community. We had a meeting with Syrian representatives in Alula during an emerging market conference. We had a meeting on fragile conflict-affected states, and at that time, we made the first step to create a coordinating group so different institutions that can support Syria can start working together. We held a meeting here in Washington during the spring meetings. It was co-chaired by Minister Aljadaan, President Banga, and myself, with the finance minister and the central bank governor of Syria. In this meeting, we discussed how we can start rebuilding institutions and policy capacity in Syria, and how different institutions can play on their comparative advantage to help. For the funds specifically, what it means is, of course, step cautiously, but engage to first define data, what is available, how we can rebuild credible data capability. Second, central bank capacity. How can we rebuild the functioning of Syria's central bank? Third, tax policy, and how can the country rebuild capacity to create revenues for its functions. We have appointed a mission chief for Syria. We have not had Article 4 with Syria for a long, long time. And we hope that we can contribute in putting the foundation of knowledge, economic policy knowledge in Syria to get the country back on track. I mean, just imagine, they have been in a war, civil war, for 14 years. Big part of the population is not in Syria. They're in Lebanon, they're in Iraq, they're in Jordan. The fabric of the Syrian society is deeply wounded. It is going to take a lot of work by the Syrians themselves to rebuild it. And this is when international organizations can play a constructive role. Lebanon, you're not asking about Lebanon.
I had echoes that the meetings went quite well by the end, especially since the Lebanese parliament voted an amendment to the banking secrecy that is more in line with the international standards. So what are you...
So you're not asking because you know. That's very good. Very
Minister,
good.
would you like to have the last word?
Few things. I think, first of all, I really thank the IMF and the World Bank in stepping up their support to Syria and other states who are emerging from fragility. Syria in particular is a case where we have an opportunity. We have a government that is willing, and we have regional partners who are also providing support and willing really to provide whatever it takes to make sure that we bring back Syria, support its people, and make sure that we also move cautiously through that process, recognizing that obviously there are sanctions that we need to deal with and other impediments. But even with that, I think standing with them, providing capacity support and advice, and in some regional and bilateral even financial support is very crucial. I mean, the Syrian people deserve that support, and that does not stop on Syria. I mean, we're talking about Syria as an example, but we have Yemen, we have Palestine, we have Sudan, we have other countries that really need the support, including Lebanon. And they need to know that the international community, if they put their act together, the international community will stand by them. So we'll continue that.
Africa. Well,
We are almost 5 minutes over time.
Okay, ask your question shortly, and we will try
we'll
to
have
answer
a very brief answer.
shortly. Yes, it's my fault. I'm
Thank
the one
you.
that is professorial here.
My question is to the MD concerning the global uncertainty and trade tensions shaping sub-Saharan Africa's debt, risk, servicing cost, as well as our fiscal future, and its coordination with creditors such as you. So how is Africa also in all of these conversations? Thank you.
As Minister Aljadaan said, Africa was more present this time because we now have 3 sub-Saharan Africa representatives in the IMFC. But beyond that, very much on our minds, quite a number of the governors of the fund spoke about the importance to pay attention to countries that are particularly severely affected by this turbulence because they have high level of debt and that suppresses their ability to cope. By the way, countries with high level of debt are not just in sub-Saharan Africa, we have them all over the world. What has been done during these meetings is threefold. First, very strong emphasis on the 3-pillar approach of the IMF and the World Bank for countries that experience liquidity constraints. They're not yet facing debt sustainability problems, but they are on the way to there. And for these countries to concentrate support for domestic resource mobilization, concentrate attention to how to mobilize more international financing, and very important, concentrate on how private sector can play a bigger role in the economy. Second, for countries where debt is not sustainable, how to make debt restructuring faster and more effective. We have issued this week a playbook for debt restructuring that was the outcome of the Global Sovereign Debt Roundtable. And what it shows are the steps that need to be taken. As you recall, under the common framework, there was some confusion around how exactly to go about it, what is the timeline, what is the exact sequencing of steps. This is now being clarified. If we follow the playbook, we play by the book, we get debt restructuring in less than 12 months. And the third thing, very important for the fund, is that our members have put in place a way to expand our capacity to finance low-income countries through the Poverty Reduction and Growth Trust, so the fund can step up financing for countries so they don't need to, they don't need to go through a super painful adjustment because of this burden of debt. We can ease their path. But again, we want to see countries acting decisively on reforms so you don't borrow your way out of debt. You grow your way out of debt. So when countries have that growth potential enhanced, then they can also reduce that vulnerability. It wasn't very short. My apologies.
Minister, would you like to add?
No, I'm fine. I think the managing director did a great job in answering. So.
Yeah, look, you have to forgive me. For 14 years, I was a professor, so it kicks in.
We enjoy it.
Thank you very much, everybody.
And this does bring us to an end, so thank you for joining us. And let me just add that the full transcript of the press briefing will be available online on the IMF website. And of course, should you have further questions, please don't hesitate to reach out to my colleagues at imfmedia.org. Thank you.
Thank you.
US companies operating in South Africa, they are big investors, but they are also investing to export to other markets on the African continent. So you have got this uncertainty of companies not knowing whether they should be investing because they do not know what is going to happen. And so that is how we saw the transmission coming through.
Dr. Rajan, is there any time that's analogous to this?
It's hard to think of one which is very similar. I think this kind of policy experimentation on such a big scale by the strongest economic power in history is, maybe Franklin Roosevelt playing with the gold market in the 1930s. And of course, there were trade shocks then also. That might have been a form of experimentation at a time when the world was on a quasi-gold standard. But I think this is really maybe early 70s, Nixon and the collapse of the